Calm yourselves, ladies and gentlemen. We had to get your attention now, didn't we? Is that me in the picture? Let's be honest now. I know we're talking about this OnlyFans thing, but does it actually look like me? Come on, man. I ain't gonna do that. Or would I? Market takes a dump today, ladies and gentlemen. The sweet, bittersweet, should I say, is actually coming into fruition right now. The market's getting to grips with the idea that things ain't going to be looking too good. Is it, FUD? Is it? Only the last week we've had reports about a 5.25 terminal rate, 5.3, 5.35. Now we're at 5.6 because the bets are coming in. All the Fed speakers are talking for, we need to increase interest rates. We need to increase it. You know, there's a lot more to be done. Then you've got Yellen, on the other hand, saying that the US is going to narrowly miss the recession. Unemployment claims again come out lower than expected. CPI core price data comes out today again. An increase, just solidifying that whole story of inflation. Now we're going to go into next week with more bouts of data. And as we have said, the Fed is looking at the data. So any move to the upside will be welcomed with resistance, which is why I'm always saying to you, pay yourselves. Take something from the charts, man. But in tonight's live, we're going to break it all down. I wasn't meant to go live, but we needed to kind of bring the naked truth. I mean, come on, man. Did you think I'd do that? It got you chatting, though, didn't it? Let's get to the flavor, man. All right, then. Here we go. So, first things first. Bitcoin. Let me just put this out there. This is where the picture comes from. Yeah? Burt Reynolds. That's my guy. We've got some fantastic guys in the Discord. Great at Photoshop. So don't get it twisted. That isn't me. You know? You got to pay to see that stuff, man. That's where we're going with it. All right, then. So Bitcoin, let's have a conversation, guys. Jokes aside. Bitcoin has come back down and recovered the vector candles. Here we go. Close up. There we are. Remember the little exercise that I've encouraged you guys to try and make yourself aware of how these candlesticks work. And if you are new to the channel, check out the Traders Reality website where you can download this indicator free of charge. They've made their way back into the liquidity and tapped that 800 EMA on the 1 hour time frame. All right. Now let's just go back to last night. Remember when we actually had the book map up and we zoomed out on the data to suggest where we would anticipate Bitcoin to end up. Look at the pools of liquidity to the left. You might not see it. And look at the liquidity here. Let me just move it over. There we go. You should be able to see that now. This was the area that we were talking about last night. All right. Come away from that. Go to that live. It was the 100K special. That's where the liquidity was. What is wrong with your face, my brother? How am I pausing it at that point? Anyways, the liquidity ended at 23,300, which suggested to us that if the interest was going to come in, traders would end up taking the liquidity right here. And if the limit buys were going to succeed, then we would anticipate price to retrace back up. We go back into the chart itself, and you can see that the 23,300 got taken. Let's mark that bad boy zone off right there. Here we go. 23,300 just on the nose right there. So they ate that liquidity, then price come back into it. So all those guys that went long on the limit orders in this chart right here may have seen a little bit of success if they didn't get liquidated. We go over to the high block itself. Let me just get the high block up. Here we go. High block, happy days. Let that bad boy load up. Let's get that in, sign in, check that out. Cool. There we go. Liquidation heat map. And let's have a look at this. Here we go. So last 12 hours, look at the liquidity being taken. Once, twice down there. Go to the 7-day chart itself. Have a view of the liquidity on there. And look at that. They're working in threes. 1, this area. 2, this area. 3. Now the market in principle has eaten a lot of liquidation points. We go to the 1-month chart itself. And we are itching closer and closer towards that 20,900 with $20 billion worth of long liquidations. Now we go back into the chart and have a look at Bitcoin on the daily. It's no surprise, ladies and gentlemen. Surprise, mother. Anyways, I'm not going to say it. Vector candle recovery. Sound boring when I say it, but when you understand how to use this system, you'll end up seeing this happening over and over again. And as you become more confident in its use and aware of how to apply it, you're going to see the success. This is a psychologically based system. You're all about trying to gauge the difference between when price is moving up and how long traders are holding their positions for and not paying themselves because they believe Bitcoin's going to go to 1 million, 10 million, 15 million, 300 million, whatever madness is being put out there. And it's a wild thing. And the sad truth is, people look at that and they think, Bitcoin's at 23,000 right now. I'm a hold. Because you're anticipating Bitcoin to get to 10 million or 2 million, 1 million, 3 million, even 500K. Don't get it twisted. Bitcoin's going to stay around as long as the person's behind Bitcoin or everybody buying it. It's going to maintain that. But you've got the problem of the marketplace that Bitcoin is following, all right? One way or another, Bitcoin's going to stick to the bigger picture because the only way that Bitcoin can really move up is if you've got big money coming in. And big money will only come into cryptocurrency once we get the regulation. That's the truth. They've said it. Wall Street won't touch cryptocurrency with nothing unless there's regulation. Do you think Wall Street are going to buy it? No. They're going to get the money that is given to them by investors, put into hedge funds, and the hedge funds are going to go buy it with that money. And until it's regulated, they can't endorse it as a viable asset. I mean, look, don't shoot the messenger, but I am only putting my opinion on this concept. Until Wall Street sees cryptocurrency as fit for purpose in the sense of physically buying Bitcoin, you can trade it on the futures markets, happy days. But to really hold it, they ain't going to give that to their investors, given with all the scandals that have happened in cryptocurrency. And good old Sam Bankman-Fried has got more beef on the game as well. So it's one of those stories. But looking at the way things are, look, you got stocks dropping with bets on Fed peak rate. Now 5.4, I saw 5.6 being dropped about. And last week, we spoke about this brother right here. Where is he? No. Where's my guy? This guy right here. Good old Mohammed. He said that the yield, the 2-year yield, needs to be at about 4% before you should really consider buying stocks. All right? And he's popped his head up again and said it. The Fed is behind yet again as hot inflation data signals bad news for stocks, bonds, and the economy. The purpose is this, guys. The money is moving away from assets, and it's evident right here. Where are my yields? 2-year yield. What is going on? 5%. That's the 2-year yield, right? This is the 10-year yield. Heading towards that 4% projection zone that we want. All right? This means that you can lock up money for a shorter period of time rather than a longer period of time. And the reason being that the yields are going up is because investors don't think the economy is going to look good in the near future. Why would you lock up your money in a 10-year bond when you can get it in a 2-year and get way more volatility and bang for your buck in principle? Okay? As long as this bad boy is moving up, you don't buy anything. Now, of course, there's different strategies. I get it. You guys want to pick up things on the cheap. Cool. But this is suggesting to us that the marketplace is coming to terms with the idea that it's going to get a little bit tricky. All right? Whether the market is going to turn into a recession or, again, the economy, should I say, going to head in towards a recession or not, you've got a booming jobs market. Unemployment claims are going down. The ISM manufacturing index came in well this week. We've got more readings coming out next week. There is no sync between data that's coming out and what the marketplace is suggesting, okay? And this is the situation that we've got. So then when we go over to Bitcoin, we look at it and we say to ourselves, well, let's be honest now, all right? How much can Bitcoin drop down? Well, we've got liquidity here, and we said if they recover 50% of this vector candle, then we're naturally going to anticipate Bitcoin to break down further. This is the point that Bitcoin needs to hold from. So go get yourself a good old little trusty Fibonacci. Take the vector candle, go down, trigger that bad boy. It's broken the midpoint of the vector. Okay? Now, what do we mean by the midpoint? This candlestick wasn't a vector candle straight away. It became one. And we assume that the average or the midpoint of the candlestick is usually where they start the pump, or the red vector candle is where they start the move down. If they can succeed against breaking beyond this point, then they will continue to take all the rest of the liquidity. But if they can succeed at holding this point, then we would assume that Mr. Market Maker inside of this zone right here has got an interest in grabbing traders' liquidity and making them buy again so that he can mark price up and pull another dirty short from that top zone as well. So that the next time it comes down to the midpoint of that vector candle, if it hasn't created any vectors on the way up, then there's a good chance that it's going to come back and eat the rest of the vector candle on the assumption it doesn't take it. All right, remember, guys, we're talking right now in real time. We don't know exactly what's going to happen. But if you go back into the charts, I mean, look at this. Look at this candlestick. You take the 50% midpoint of that region. Okay? Look, they held the 50% zone. So that says to me that when you see the red vector candle breaking down, recovers 50% of the green vector, and doesn't break down against it to finalize the rest of it, that's a sign of strength. What you're looking for here, or what's happened here, is what you're looking for here. Okay? Now, when we look at it again, we've already broken the midpoint of the candlestick. So we're at a stalemate in principle, because we're not going to know if it's going to go up or down. Now, the bigger picture would suggest we go to the 8-hour time frame. We can see that there's liquidity for them to take. Now, we look down below and we say, okay, so what's down there? Let's bring up the book map and have a look. Here we go. Zoom out. Where's the liquidity? If they're going to go for the liquidity, they're going to take it, guys. And there's now at the bottom here, 22,500. We got 602 Bitcoin. We got 569 Bitcoin at 22,700. And then just before that, we got 22,800. We got 489 Bitcoin. And in a little bit of a skanky zone right here, we've got in between the 23,000 and the 22,900 zone. So let's round it off and say 22,950. We've got 1,061 Bitcoin, and then at 22,900, we got 962 Bitcoin. There's a lot of Bitcoin orders being placed on the order book in anticipation of being filled. I don't see any limit orders up here for the sales, okay? These guys want to pick it up because they believe that Bitcoin could continue back up from this point. The only way Bitcoin can move back up from this point is if it completely dismisses the whole narrative of what's going on across the board. Bitcoin needs to disrespect NASDAQ. It needs to completely dismiss the S&P. It needs to come away from the idea of Dixie, and that's the dominance of the dollar. And if the dollar's going up, it means investors are turning to cash. They're selling up their euros. They're selling up the pounds. They're selling up the Canadian dollars, and they are running to the dollar itself. So, with that being said, we go back into the dominance of the dollar itself and we have a look at where we are. Look at that. We said it last night, ladies and gentlemen. This ain't no surprise. The vector candle gets recovered. And there it is. Happy days. We were looking for that zone. Dominance of the dollar has been established, and this is something that I talk about with the patrons. We've been waiting for this zone and we've been projected it out many a times. The fact that Dixie was going up slowly. Look at the climb. This is what you call a bullish move, okay? When it rises up slowly, controlled. When you see a fast move up, fast move down, it stinks. Look at this. These are fast move up, fast move down, all right? Look at the bear market on the Dixie. If you look, where are the biggest candles in the chart itself? This is one of the biggest candles, okay? I would then say that maybe that one right there and then this one here. But overall, it's been dropping slowly, okay? It's trending lower. Now we're starting to move back up and we've crossed the daily. We've crossed over the 50 and the 200 and the 800 EMA. That is a blueprint right there to suggest that the dominance of the dollar will continue higher up. We only need to look left and look for the remaining vectors. The bigger vector candle sits at the top here at 109. Go down a smaller time frame and look left, and what do you see? Another vector candle right there. So here we go. Vector candle zone, happy days. Any more vector candles? Well, we've got this last zone right here, which I told you to mark off last night. There's your recovery right now. I haven't fully recovered it, but it's on its way. Now, the dominance of the dollar is closed tonight, and it won't open again until Sunday night, 10 p.m. GMT. So we've got to be mindful of that. Okay, the only thing that's open right now is good old BTC. Okay, now looking at Bitcoin, we need to understand where we are likely to end up seeing it going tonight. Well, it is really the last night with Asia opening this evening. Now, the markets are still open, but none of the marketplaces, like the hedge fund managers, all right, those are closed because it's a Saturday. So we could get a lot of volatility in Bitcoin, and it could continue down even lower. So just mark off your charts. You've got the blue vector candle right here. Happy days. There's that zone. All right. So just be mindful of the vectors. When you're using vector candles, look left, because that's where markets transact. We go across to Euro. Euro continuing its move down lower. There we go. Back into what? Good old green vector candles. We've been waiting for Euro. We marked it off this week in the Patreon itself, projected it out from Saturday, and we've just witnessed it just break down. Happy days to the guys that took advantage of Euro. I ain't even going to mention to you dollar yen. Oh, my days, dollar yen. There's our structure we've been drawing out. Happy days, vector candle recovery. It all comes through in the end. Well, my best one, I think, was USDCAD. Look at that. W formation, rise up, retrace, continuation out. Okay? So we had these all projected out and purely off the idea and awareness of the way price structures itself. Okay? You're getting bouts of data coming in suggesting that it's not going in line with the Fed's fiscal policy. They've increased the interest rates, and it's not done anything because inflation looks like it's going to go back up again. Now we need to go over to the volatility index to understand what's going on there. Check this bad boy out. Where is it? Volatility index. Painful. Come back into vector candles, recovered those zones, shift back up, go to the 1 hour time frame. There it is right there. Look at that. Come back into that red vector. They left us a clue as to where they could end up. Come back into that vector, happy days. Pull back, continuation. That's what we would anticipate. The NASDAQ, painful day for the NASDAQ, all right? Absolutely painful. Look at that bleed to the downside, man. Unfortunate event for NASDAQ. Look left, and what do you get? Vector candle recovery. We've been waiting for it. I've been talking FUD. There's no reason why I'm talking FUD. It's because that's what the market is showing. Remember, the market is not the economy. That's the truth. But don't fight the Fed is what needs to be focused on. And the market's been fighting the Fed ever since NASDAQ made this M formation up here. This was my point on belief that NASDAQ was going to just take the nosedive. Principally, we would assume that NASDAQ is now from the highs up here on the bigger time frame. A drop, this, in my opinion, would be a level 1. Okay? Because the consolidation is more here than it is here. So we are now working a level 2 drop to the downside. Our next projected zones are down here at 11,697. Okay. Going into oil. Oil has had a little bit of an issue. Going down, going up, only setting up for what's going to happen next week. These are the next points in oil. This is standard news plays right there. Investors are getting scared. Now remember, oil itself against the back of the dollar. When USDCAD, look at this. USDCAD goes up when oil goes down. It's been going up. And it was going up around the same time as oil, but it didn't. It actually started to pull back ever so slightly, and it happened on very light volume, okay? Now that we've had these big moves by dollar CAD, we're expecting a continuation back up at some point, looking for that vector candle at the top side right there, all right? Looking at USDT. There are the clues back into those vectors right here. Now, some of you might think, oh, Tino, shut up with your vector candles and all that stuff. Well, I always say it to you. You're only trading to the nearest vectors. Don't look for a vector that is nowhere to be seen. or it's going to take a while for it. Let's look at that. Look, let's go to Bitcoin for a second. And let's go to the daily, all right? Bitcoin 17,400. It's going to take a little while to get to that point. Unless Bitcoin just collapses, which is unlikely. It's going to take its time. That there, it's going to come to it at some point. And if this move sustains itself and it breaks the 50 EMA and shakes out all the guys who traded the Golden Cross, we're going to assume that Bitcoin's going to come back down to this zone. Now, when you say, Tino, yeah, but what about the vector candle all the way at 60 or 45 and the vector candle all the way at 50 and all the way at 62 and all the way at 66? Yeah, okay, I say Bitcoin's going to go lower, but I am not forgetting the fact that Bitcoin will take back these vector candles at some point. They will. Look at where we are in the marketplace. So these are footprints. Remember, we can't be irrational when it comes to trading. The market can. That's the truth. We don't have the capital to fight Mr. Market Maker. He can stay in a drawdown for as long as he wants because he knows when he's going to move price back up again. That's the truth. And he'll then start inducing traders to step in and start shifting price higher and higher and higher, retrace, continue back up. And before you know it, Bitcoin will be sitting at the 38 zone and you'll be saying, eventually that vector candle got taken. But when you're looking at the candlesticks themselves, you're looking for candles in the nearest zone. Again, if Bitcoin can't take the 25.28 zone right there, then we're not going to see this vector candle zone yet. This could be the top. This could be it, guys, where Bitcoin just continues and breaks down. We look at the weekly time frame on Bitcoin, and it's recovering the green vector candle achieved for the week. Now, I would prefer Bitcoin to recover this as fast as it can and stabilize inside of this zone. That's what I would prefer. I'd be more comfortable when Bitcoin hits this vector candle and holds, as opposed to buying up Bitcoin now and saying it might not actually go down any further, because I think it's going to hold out. It's already recovered 50% of this whole weekly candle. Look, let's get the 50% zones drawn in again, but this is for the week, all right? Take that, go all the way down, and there you go. It's recovered it. And it looks like it will continue to go lower, and if it closes strongly on the weekly, then the start of the next week could lead to a continuation lower. Principally, you're looking for it to stay lower if you are in shorts, all right? And you want to buy up Bitcoin, you're going to have to be careful on the close of the weekly candle, which will be Saturday at 11 p.m. GMT. That's when the market resets in cryptocurrency, all right? Cool. Now, going back over to here, just to understand something, check this out. Do you guys remember Lockheed Martin Corporation, who received the contract only last week? So if we go into, I believe it's the 21st. No, let's go back a second. 17th. There you go. The 17th, Lockheed Martin Space, Littleton, Colorado, was awarded $1,178 million contract. And then, okay, contracts for February today. Is it today? No, yesterday. Lockheed Martin Corp again was awarded another $170 million. What is going on with this? So it's an aerospace company. Big money's coming into this. These guys are sorted out for the next however long. I think it's the next year or 2 years. Which then makes me ask you the question about the tensions that are happening overseas. You've got China now suggesting that there should be a 12-point peace system that the Ukraine and the Russians should come to an agreement with, when it was only 2 days ago China was looking at offering arms to Russia. There's a lot of chess being played right now, guys. And always look at the marketplace to understand where that chess-like way of thinking is and work out where investors' heads are at, if they're fearful or not. If the yields are shifting to the upside, all right, like this, that tells you that the market is not happy right now, okay? It's scared. It's taking their money out of assets, going up. Let's look at Tesla for a sec. This bad boy's been moving up. It gapped down, okay? Looks like Tesla's going to start breaking down. We've got gaps down here that we need to see Tesla come and finish, realize. They've recovered that vector candle, and this is for stocks. The hybrid system works for stocks as well. It works for indices. Look, like we spoke about NASDAQ. Let's look at the S&P. There we go. S&P right there. Recovery of the vectors. Happy days. Vector zone 1. Waiting for the next zone at 3.9. Did they take it? Huh? They took it. They nearly took it. Not fully, but they took some of it right there. Okay? Let's go to Apple for a second. When you're looking at the charts and you want to understand what's going on in the marketplace, it's good to look at the big cap stocks. They are important to pay attention to because they move the market. All right? So if we just go to Apple for a split second. Here we go. Pull up Apple. Apple's market cap, man. Look at this. 2 trillion. 2.3 trillion. Yeah? Apple's market cap completely dwarfs cryptocurrency. Look at that. That's crazy, isn't it? For one stock. All right? Big money, man. So then you look at it and say to yourself, well, let's look at the bigger picture on cryptocurrency. Where have the orders been put? If you just simply look at the crypto cap, look, we got vectors to come into, man. And they're working their way into it. So there's been a lot of sell-offs happening, which leads me on to the altcoins. Most altcoins are now trading below the 50 EMA. Okay? Heading towards this next vector zone, and they're not too far away from it. All right? I advise that you just proceed with caution over the weekend, guys, because we've got a lot of news coming out next week that are going to move the marketplace. All right? So, I apologize if you do not like the thumbnail. I like it, but it's not me. But that's for another day. If you are new to the channel, be sure to like and subscribe. And mad love to the guys making it happen at 100K. And I'll be checking in with you all on Monday for the standard market update. Take care of yourselves, gang. Mad love. Peace.